Hello, everyone. It is Weston Means here once again in the San Francisco Bay Area, here to look over your market stats for January 2024. We're back from a short hiatus, but we're going into the year somewhat strong. Prices are looking higher than they were last year, despite the much higher interest rates. But we are seeing less sales for the most part in most of the counties that we're going to focus in today, which are going to be Alameda, Contra Costa, Marin, and San Francisco counties, which are the main counties that I focus in and the main counties I do business in. So as always, these are the numbers from the prior month. So we're in February right now. It's actually almost the end of February, but the numbers for the previous month are always released in the third week of the subsequent month by the California Association of Realtors. So right now we're looking at the data for this January 2024, and I'm seeing a bit of a pattern here. Obviously, San Francisco County since 2020 has been a bit of a wild card. It doesn't really follow the same trajectory as the other counties because when 2020 happened, things got very, very inflated. The prices there went very, very high, and then later that year we switched over mainly to a lot of remote work, and a lot of folks realized, hey, I don't actually need to live here, and so they started moving away from San Francisco. And overall, pretty much since 2020, we've seen a general trend of people moving away from California because the cost of living here is just so high. Folks are moving to places like Arizona, Texas, Florida, even just a lot of lower cost areas, even places like Montana. So we've seen the prices there shoot up quite a bit. We've seen a general migration away from California, but the folks that are here are still willing to pay higher and higher prices as time goes on. Interest rates begin to go up. And 2023, the interest rates were pretty much up the entire year, and yet we still saw an average increase in California from the previous year in terms of home prices. Just looking at the data, let's dive into Alameda County first. The median price as of January 2024 was 1.103 million. And that was a 6.1% decrease from the previous month, so that would be December 2023. But it was a 8.7% increase from that time last year. So January 2023, the prices were 8.7% lower on average. And that's kind of crazy considering how much higher the interest rates were. I think it was in maybe October, the interest rates actually went above 8% for a bit. And now they're hovering right around 6.5%. But the interest rates got really high, towards the second half of last year. And we still saw an 8.7% increase from last January to this January. Now, home sales are down across the board. And this is year to year. So from last January to this January, they're down 10.7%. From December 2023 to January 2024, they're down 33.6%. And this was an interesting data point that I recently learned about when I was looking at the graph for California sales, is that the month of January is pretty much always the lowest month for the prices of homes. So like you could see January 2022, January 2021 was there. As you can see, it's pretty much at the lowest point in January every year. So like here's another low point. January 2021, that was a low point. 2022, another low point, 2023, and 2024. And that's surprising because you would think that December, which is the month with the most holidays, you got like Christmas and other religious holidays, as well as New Year's, which is a big thing. A lot of people just aren't looking for homes in December because a lot of people go back home to see their families, maybe see the grandparents and stay with the grandparents and things like that. And so there's very little searching for homes in December, and yet January actually seems to be the time when the prices of homes are the lowest. And then from there, it typically climbs up and peaks around the beginning of summer. And then there's another peak usually around October, November. So, you can see that here. And it seems that the summer peak is usually higher than the peak in the fall. So anyway, I just thought that was an interesting data point to share with you. Home sales are down year to year and month to month in Alameda County, and unsold inventory was about 2 months, 1.9. That's a very, very low level of inventory. In real estate, we tend to say that about at least 3 months of inventory, that might be a little better, but a really healthy market is more like 5-6 months of inventory, unsold inventory. And so the fact that across the board here, we pretty much have less than 3 months in all of these counties. Even in San Francisco County, we have 2.8. These are pretty much seller's markets still, because the level of inventory is still so low that the competition per listing in all of these counties is still quite high, and the prices are selling, as you can see, higher than the previous year. So let's just finish off the data for Alameda County. So median time on market was 19 days this January. That's not incredibly fast. That's actually, it's within 3 weeks, but it's more than 2 weeks. So, in comparison to years like 2021 and even the beginning of 2022, this amount of days on market is not bad as a median. And month to month, that was a 26.7% increase. So from December to January, listings tended to stay on the market 26.7% longer, which is good for buyers. And year to year, it was down 29.6%. So from actually last January 2023, it was 29.6% easier to buy a home, theoretically. So essentially what this means is the average median listing was staying on the market 29.6% more days than it did this year, which was 19 days. So if I just do a little quick math for you, that would be about 25 days, between 24 and 25. That was an even easier market to buy a home in Alameda County. All right, now moving on to Contra Costa County, let's take a look at this. The median price for this January was $770,000. That was a month-to-month decrease of 3.8%. So, like as we saw earlier in that graph from Redfin, the lowest month for prices is usually January. So from December last year to this January, there was a 3.8% decrease in the median priced home. And year to year, it was an increase of 6.2%. This is kind of similar to Alameda County. Home sales were actually up in Contra Costa County, 8.7% from last January. And this is good news because we haven't seen levels of inventory increase meaningfully for a while. So it seems like more homes are starting to go on the market in Contra Costa County. However, month to month, it was down 17%. And that's less than Alameda County and also less than Marin County. But, the sales were down 17%. And this is again because January tends to be the slowest month for real estate sales and for prices as well. Now, the level of unsold inventory was 1.7 months. That's quite low. And that was an increase of 41.7% from December, which means that the amount of inventory that has remained on the market and is still available is beginning to increase from December to January. And so that's actually a good sign for buyers because that means that there's going to be more options on the market. That means quite a few more listings are staying on the market and not selling, and which means that sellers might be having unrealistic expectations for how much their homes can sell for. You know, maybe when they listed their home on the market, they listed it too high and it didn't generate enough interest to get any solid buyers that were willing to offer at that price, and that could result in that listing staying on the market and, you know, beginning to become stigmatized over time as it's not selling. And that's why it's so important to list your property at a proper listing price that's really going to generate enough interest so that you have multiple buyers that are trying to compete to purchase that property. And this is pretty much how you get the highest prices in the Bay Area. And it's a very frustrating experience for buyers. You know, I've worked with a lot of buyers who see a home priced at $699 and they expect it to go somewhere in that range, around $700, right? But the thing is, when a home is priced at $699, they may actually be trying to get $900, or they may even be trying to get $1 million. It just really depends on the market. And so when sellers are looking to price their homes, you always have to look at the comps that have sold nearby, see what is available in your area, what's gone pending in your neighborhood as well. And you have to list your home at a price that's compelling enough to generate enough interest so that there are potentially going to be multiple offers on your property, and you're going to have buyers competing, buyers agents running the comparable sales within that area to see how much that home is really worth. And then they might even take that amount and add a little bit extra on top, because we're in a market where there's such little inventory that many buyers will be willing to offer a premium just to get a home. And a lot of buyers have been in and out of the market for years now, and so some people are getting frustrated and they just really want to get a home that they love and just stop all this craziness. So that's really important. All right, now looking at the median time on market for Contra Costa County, we had 29 days on the market. That's 10 more days than Alameda County, so it looks like Contra Costa County is significantly less amount of competition in Contra Costa County. Month to month, that was an increase of 58.3%, which is significantly more than Alameda County. So it seems like from December to January, maybe there's less folks looking in Contra Costa County. In general, there's less competition in that market. And year to year, it was a decrease of 8.1%. So that's actually less of a contrast that Alameda had from last year. The level of competition seems to have stayed fairly stable in Contra Costa County, except from December to January, it was a 58.3% increase. All right, now moving on to Marin County. Marin County, you know, I always say this in all of my videos, but Marin County, there's just so many differently priced homes. You know, there's everything from 10 million, 20 million, even, you know, 30, $50 million homes in Tiburon and places like that, that it's just not a really great county to get a really good median price. So the data isn't always incredibly meaningful, but we will be able to see some patterns. So the median price in Marin County was 1.524, which is higher than Alameda County. And it's about on par with San Francisco, maybe a little bit lower. Month to month, that was a decrease of 2%, because January, again, is the slowest month in real estate. And year to year, it was an increase of 26.9%. And that is a stark difference, which means that, you know, if we are going to take this data into account, it seems that there has been a little bit more competition to buy homes in Marin. It could be because, you know, the amount of inventory available is very low, which you could see here. It is actually 2.5 months was 44.4% less unsold inventory than there was last January 2023. So that right there would explain why year to year the prices have gone up 26.9%, the median price. Now, if we look at the home sales were up 56.8% from last year, despite there being 44.4% less homes, there have been 56.8% more home sales. And so that means that despite there being less inventory, there are more sales, which means that buyers are probably getting a little more aggressive, which also explains why the prices have gone up year over year. Now, month to month, they were down 38.3%. That's kind of similar to Alameda County. All right, now looking at unsold inventory, we had 2.5 months. That's a little better than Alameda and Contra Costa County. It seems there's a little bit more inventory. That was an increase of 66.7% from December. So it looks like more homes are staying on the market. However, more sellers might be coming out as, they've come out of the holiday slump in December. Usually in the new year, a lot of sellers begin to start getting ready or maybe even putting their home on the market. So that could explain that increase. As we discussed earlier, the unsold inventory went down 44.4% from last year. Now, the median time on market was 58 days this January. On par for Marin County. Listings tend to stay on the market a little bit longer, and that was a 12.9% decrease from December, which doesn't follow the same pattern as these other two counties. But, at the end of the day, this is Marin County. It's a bit different. And year to year, it was down 20.1%. So that's following a similar pattern to these other two counties. The median time on market seems to be decreasing year over year. So that means last January would have been a bit of an easier time for buyers to find and purchase a home than it is this January. Now, lastly, San Francisco County. This is, like I said before, this has been a wild card for a few years here, but the median price of a listing in San Francisco County this January was 1.53. That's the highest out of these four counties, and it was an increase of 5.5% from the month prior, which was December. And that does not follow the same trajectory as any of these other counties. It seems like some folks may be starting to look back in San Francisco. Maybe some people were looking into moving away. Actually, last year there was a little bit more of companies requiring folks to be in the office again. And so that could explain some buyers returning to the San Francisco market and driving up the prices. Despite January supposedly being the slowest month in real estate, it looks like there's a little bit more competition than there was in December. And that was an increase of 10.5% from last year, even though there's a general migration away from California and there has been a migration away from places like San Francisco. The average median prices have still gone up 10.5% from last year. Looking at home sales, year to year, we had a decrease of 5.1%, month to month decrease of 20.5%, which means that the amount of sales in comparison to last year are down, and they're down also from December. So it's looking like there may be a bit of a discrepancy between what sellers are expecting and what buyers are expecting. Now, unsold inventory was 2.8 months. This is actually the healthiest out of all three of these counties. It's almost a 3, which is somewhat of a balanced market, but it's still 2.8. And that was an 86.7% increase from the month prior, December. And that is quite a bit more inventory. So it seems like, there's quite a bit of unsold inventory there that is piling up from December, listings that just haven't sold. And so there may be some opportunities for buyers to go in there, find a deal, and, come to some sort of agreement with these sellers who have realized that they may have priced way too high, and they're going to have to start being a little more realistic about what their properties can actually sell for. Now, year to year, that was a decrease of 3.4%. That is following the same trajectory as the other counties. Not a huge difference from last year, so the amount of unsold inventory has stayed somewhat level from last year. Now, the median time on market was 85 days. This is the most out of these four counties, and that's to be expected in San Francisco. It is a very high-priced market, and a lot of sellers since 2020 have held on to the idea of being able to sell their home for, a very good price. And so that could explain some of this unsold inventory and sellers just not really wanting to reduce prices on their homes too much and just really waiting for the buyer who's going to see the value in it and be willing to purchase their property for what the seller also thinks it's worth. Now, that was an increase of 77.1% from December, and it was an increase of 71.7% from last year. So it looks like it's becoming significantly easier to purchase a home in San Francisco. 85 days is quite a long time. For the most part, in Alameda and Contra Costa counties, the days on market has pretty much stayed under 3 weeks for quite some time. It's been an extremely competitive real estate market out here in the East Bay. And so to see that it was 85 in San Francisco, that means that when you list in San Francisco, your home is likely to stay on the market for a while before being able to get a full price offer, if you do even get a full price offer. So things like making sure your home is properly prepped, deep cleaned, staged, maybe had the paint touched up, and little cosmetic things have been fixed is very, very much more important, because you're going to want the sellers to walk into the home, fall in love, and be so compelled by the property that they're going to want to make an offer on the spot. So that's it for the data, guys. I'm going to leave you with some closing thoughts. So Alameda and Contra Costa counties have stayed pretty competitive, although Contra Costa County is starting to ease up a bit at 29 days average on market. So there may be an opportunity to get some deals there in Contra Costa County. Places like Martinez, also Richmond. A lot of people don't know about the East Richmond Hills, which are right next to El Cerrito. It's a very nice neighborhood, and not to say that the rest of Richmond isn't nice, but you know, there are some beautiful homes there with beautiful views of the entire bay, and they're pretty fairly priced. You know, the median price in Contra Costa County was $770,000 this January. Alameda County is a little more pricey. You know, the market is still quite hot there. 19 days average on market, that's less than 3 weeks. Things are still selling pretty fast there. Now in Marin County, prices have gone up pretty significantly from last year, but the amount of competition is still not too bad. It's at a median time on market of 58 days. That's quite a bit of time to go in and look at a property and, you know, try to strike a deal with the seller without having to worry about lots of other competition trying to come in and sweep up the home at the same time. San Francisco County seems to have slowed down quite a bit. This is a pretty significant change from both December and last January. They're actually pretty similar changes in the median days on market. And so what that tells me is there are more deals to be had in San Francisco. The prices still have gone up despite the much higher interest rates. You know, it's an increase of 10.5% of the median price, which means that things are still slowly moving up. What these numbers tell me are that inventory is beginning to increase, or, you know, just not selling. That means that there are more deals to be had. More properties have been sitting on the market, and more sellers are slowly becoming more and more motivated as they're realizing that their listings aren't selling at the prices that they thought they would. So as always, guys, if you have any other questions about any other markets in the San Francisco Bay Area, I'm happy to help. I have teammates in all counties around the Bay. These are the 4 that I really focus in and do most of my business in. So if you would like to go see some homes in one of these counties, or you'd like to ask me some questions about what it's like to live in one of the cities in one of these counties, please feel free to reach out. As always, I'm here for you guys. I'm here to answer any questions you have about either the market or the buying process, the selling process, things to do to prep your home for the market, things we can do to market the property to agents off market before it even goes on the market, to generate that buzz and that interest before you actually list the home on the market. So if you have any questions about anything real estate related to the San Francisco Bay Area market, reach out to me. As always, my contact info is below, and I'll see you guys in the next one.